Over the past few decades, Japan has made headlines for its moribund economy and lagging stock markets. But things are starting to look up in the land of the rising sun, according to David Rosenberg. Here, the chief economist at Gluskin Sheff Associates lays out 15 reasons why investors should love Japan. 1. A 25-year secular downtrend has recently been broken. The Nikkei 225 is back trading at levels last seen in July 1996, when the S&P 500 was trading below 700. 2. The negative correlation between the Nikkei 225 and the yen has been broken, suggesting that the Japanese market is trading more on fundamentals than currency speculation. 3. The Japanese small-cap stocks have been outperforming the large caps, in a sign that homegrown domestic demand growth is staging a comeback. 4. The unemployment rate is below 3%, and there are 1.52 jobs now for every applicant, a number we have not seen since at least 1974. 5. Companies are complaining about labor shortages now more than at any other time in the past quarter-century, and the government is responding by allowing stepped-up immigrant labor. 6. The most bullish chart in the world is that of Japan's 25 to 54-year-old female labor force participation rate, helping to augment domestic income growth. 7. Japan is over 8% of the global market cap, but global PMs have an estimated 6% of their portfolios exposed to Japanese stocks. 8. Dividend yields of 2% now rival those in the US, but the difference is that in Japan, they command a 200 basis point premium over 10-year JGB yields. Payout ratios of less than 30% compared with 40% in the US. 9. Political stability. Abe is in for another 4 years, and with tremendous support. There are few countries in the world with such a certain political outlook. 10. The PE multiple in Japan is one of few globally that is not above the long-run norm. 11. Cash is coming off Japan Incorporated balance sheets, but still stand at 20% of GDP versus 5% in the US. In other words, there is more dry powder in this respect in Japan.